Okay, Daniel, thank you very much for showing up here on a Monday. I know you told me you're on Fox Business News last week. I made you the presenter. I don't know if you have a screen to share. If not, I can show your web page, and your microphone, I believe, is unmuted. Oh, there we go.
Can you see me? Can you hear me, Dale?
Yeah. You put together a nice PowerPoint for us. Nice
well,
meeting.
no, that's this is an old one, but I figured I'd put that screen up.
Okay, well, great to meet you, Daniel.
Nice to meet you too. Your seminars are fantastic.
Oh yeah, you check them out every once in a while.
Yeah, I check in. I work out in the morning, so I listen to you guys, and I think you guys are such value to people out there who don't get it and don't understand it. So I give you a heads up for that. It's wonderful.
Appreciate that. So you were a floor trader on the knife.
Yeah,
right?
I started in 1983.
Okay.
Right out of college.
All right. So okay, it sounds like you had a similar path, only it took me 10 years to get my seat. So you went right to the exchange as a member. Why don't you tell us a little bit about your experience on the floor? Did you like being a floor trader? I learned to trade off the floor. So I really didn't really care for open outcry. They actually hand off my order so I wouldn't have an out trade the next day.
Right.
You know, people lost their seats on, coming in the next day thinking they're flat and they're long a bunch or short a bunch.
Yeah.
So that was a great place to learn for a guy.
That was fantastic. It was fantastic experience. I mean, it was a different kind of crowd than I was used to. I was from Connecticut. So to go into lower Manhattan and deal with the floor traders, the street people, the guys that are smarter than I am was interesting. But I did it. I did it for a short period of time. It wasn't long. But the experience was fabulous because when I got on the floor, Dale, it was January 2nd, 1983. And I had just graduated college early after 3.5 years in December. I was 21 years old and I was leasing my seat. I was a member of the exchange, but I leased my seat.
Right.
And I stood on the floor. I borrowed money because I came from no money. I borrowed from a friend.
Yeah.
And I just stood there in the middle of the pit, and the trading started. And I bought my first contract and sold it, made a little money. And
what was the active contract? The knife back then?
Yeah, the knife. Yeah, the knife was trying to emulate the S&P out of Chicago.
Okay.
So it was right next to the New York Stock Exchange. I used to walk around the New York Stock Exchange, but it was right next to it on Broad Street.
Right.
But one guy pulled me aside and I said, how you knew, blah, blah, blah. And he says, look, I want you to write these 5 numbers down on the back of your card. Because remember back then we had cards every 15 minutes.
Right.
And I said, what are these numbers? He says, these are the floor trader pivot points. I said, what do they do? He says, just follow it. When it gets up to this level, you sell it. When it gets down to this level, you buy it. And I was like amazed. And I studied that for years. Tried to figure out why it works, and the reason it works is because it does. That's the only answer. There's no other rhyme or reason. Are you familiar with those?
No, but I know a lot of them. A lot of floor traders used to really like the X's and O's, point and figure charts.
Right. I never used those.
Yeah.
Right. So anyway, just to give you a quick, let me give you a quick background so your community knows who I am a little bit. So then Jimmy Kane heard about me because I did pretty good, and he hired me at Bear Stearns, and he gave me a desk with access to all the floors all around the world. So I started trading that, and then I decided that I didn't know enough. I was too young, so I went back to school. I got my master's in accounting, and I worked for Coopers and Lybrand, and I got my CPA, and I consulted Wall Street trading firms. And then I left that as soon as I qualified for the CPA because I knew that wasn't my career. And I went on my own and started managing money for people. And over the years, I was with TradeStation. I started with TradeStation in 1990 with the Cruz brothers. And I was experimenting with their platform and designing my own trading programs. And by 1998, I came up with some really great concepts that were automated. And I started my own hedge fund. And then, I tried to do my own public hedge fund, and that didn't work because of September 11th. I was on the road trying to raise money. And I shut that down and moved it to a private hedge fund. And then Deutsche Bank heard about me, and they asked me to manage FX on their offshore platform. And then Societe Generale heard about me, and they opened up 4 hedge funds in Europe and the United States, 2 and 2, offshore, onshore, to manage commodities and currencies. And that's what my life was like before 2008, when I said to everybody that my systems are telling me to go to cash, and they don't like that. You know, they want to be in the market. And so I said, look, my systems are telling me what to do. I'm not going to override them. So I parted ways with everybody, and I predicted that the markets were going to collapse. I was on Fox Business. That's what my claim to fame was. And I follow I just try to follow where the big money is going, and it takes time and you're patient, but usually it ends up there. So now I'm really basically an independent trader.
A proponent and follower of Commitment of Traders reports, to know that?
Yes, absolutely. Commitment of Traders report.
Part of your work.
Yes, and open interest is a key part of my work. Time and price is a part of my work. So I incorporate a lot of things together to get to where I'm going. I just want to see if there's anything else on this.
So what's your business model now besides trading for yourself?
Well, my business model is basically trading for myself. I manage a very small amount of money as an investment advisor. I cut that down, and I do a lot of speaking, public speaking, private speaking for traders and to organizations that want to hear about economics and cycles. I wrote a book called Profiting in Economic Storms, where I talk about all these different cycles.
I see. I could show it. Why don't you show that page? It sounds like you have every type of storm that could happen in the economy. One's deflation, one's hyperinflation.
Right.
You know, I'd be kind of interested, now that we know your background, to get a feel from you that, you know, some people think this might have been an inflection point in the market. I'm viewing it as a correction that's not complete, and maybe one more blow-off wave into next year. How are you positioning yourself in this market? You think it's over?
I think it's over. I think that, let me just switch out of here if I can. Let me see if I could do this, Dale.
Okay.
I'm usually computer literate, but not the best. Okay, let me go over here. This is Trade Navigator.
Okay, we see your chart.
Okay, great.
So we're looking at.
I'm looking at, first of all, I
natural gas.
But no, I key off of the bonds. I used to write a newsletter. I stopped it about 1.5 years ago. And it was ranked very highly in, I forgot the service that tracks them for a second. But I was ranked like.
Mark Holbert?
No, it's the, I'll think of it.
Timers Digest?
Yeah, Timers Digest, yeah. Okay. So I was ranked really high in the bond market movements. I was ranked #1 over the 3 to 5 year period and the 1 year. But what I did, this is my flavor, because to me, the bond market's the deepest market in the world. And you can't really fool around with the bond market. You know, the Treasuries, the Federal Reserve fools around on the short end, but they really can't.
I thought the currency market was the deepest.
I'm talking about, yes, currency market is the deepest.
Yes, anyway.
Yes, I'm sorry, in size. I'm talking about the commodity markets, you know, where you can see the commitment of traders.
Right.
So I've got, if you see on the screen there, you see how long the commercials are in the 10-year Treasury. And you see where that's the red line. The blue line is the large speculators, the hedge funds. And then the green line is the small speculator. That's a guy with less than 10,000 usually in his account. So I track this, and if I close it up a little bit, you'll see a little more of when those commercials get long, you're at bottoms, or if they get short, you're at tops. So this could go on for a period of time that's longer than sometimes I can bankroll.
Yeah, commercials have pretty deep pockets, and they're hedging.
Well, they're hedged. That's the thing. See, that's what people need to understand, is they're not losing or making. They're hedging against, they're net long, meaning that the endowment funds, the hedge fund, whoever it is actually long the treasuries and sitting on cash on anticipation that they're going to go up and they're going to buy them later. So it's a long hedge. Right. And the large speculators are basically speculating, putting liquidity in the market, which is great. I mean, I love speculation. So I look at that and it tells me, all right, we've got a situation here where I guess Stelios said that bonds could go lower before they go higher. I think he said earlier, was that Stelios? Yeah. One of your guys. Okay. I don't, and I saw some other people saying the same thing. I don't see that. I don't see that interest rates are going to go up. I don't think the economy can handle that on a GDP basis.
So you think the 320 print we had in 10-year yields was it? 325.
I think it
This
was
last
325. Yeah.
flush, because there were a lot of people when we were recovering. What is this? A monthly chart, weekly?
Yeah.
Before this last break, that were already pointing towards that, and then we had one more capitulation a few weeks ago, a month ago, in fact,
Right.
right?
Right.
So that was you're thinking. Because technically there's pretty good non-confirmation on momentum indicators down there too. So
Right.
they needed one more flush, and that was the Fed speak that took 10 years to 3.25.
That's what I see. And I also see, if
Okay.
you look down there, the bottom line, the open interest, tremendous amount of open interest. This is a very strong net long position, and they'll sit with that until it blows up. And it could blow up higher. I mean, I'm looking for maybe 122. If you're trading TLT can go to 140. I'm looking for interest rates to collapse below 2% on the 10-year.
So this will, based upon a big risk-off event in the stock market.
Yes, yes. And
Most likely.
it won't be a crash, though. You see it when I go on TV, they try to get me to say, oh, there's a big crash. No, this could last 2 years, like 1973 and 1974. You could come in. Remember the days, Dale? We used to walk in and the market was like trickling down every day.
I was still in college. It's great to
know
not that I didn't see some history in the market.
No, but even in the 80s,
Oh, okay. Yeah. All right. Thank you. It's okay. All right.
But if you look, I love your sense of humor.
I felt young for a minute. Thank you.
So now I go over to the 30-year.
Right.
And I'm looking at the 30-year popping up there, and I'm like, whoa, look at the commercials. So if you look where they did in 2017, if you can see
these are records.
Yeah, these are records. Look when they were net short, right back here. Can you see my pointer? In 2016?
Yeah.
Look where they were, and look what the damage they did. So imagine where this is versus where this is now, where it was.
Right.
That the power, especially this open interest power, can take this up and just blow everybody away. And I don't want to disappoint your listeners, but my projection is a deflationary depression's coming. And that's what I see based on GDP, based on the amount of debt around the world that will not be able to be serviced, about the tax revenues being decreased, about the civil unrest. You've got all the ingredients. All we need is a bad weather pattern like the Dust Bowl to cause crop problems around the world, and you've got a serious issue going on. And that's what I'm kind of projecting.
Daniel, so where do you live? I'm curious because, this is not, these aren't thoughts that, I haven't heard or thought about. Do you live here in the U.S.?
I live in Greenwich, Connecticut, yes.
Okay, so are you going to stay and be in the middle of it, or do you think about a haven so that you could watch it on TV instead of being in the middle of the social unrest? Huh?
Coach, can you hear me?
Yeah, I can.
Okay, I have a question for Daniel.
Okay.
Why would you rule out a dollar crisis once we go to the next recession and the Fed will have to monetize? I mean, we already had this year like a deficit of 1.2 trillion, not officially, but that's how much the US had to borrow because a lot of items are off budget. So why would you rule out a dollar crisis, which means that the next recession, instead of a deflationary, is going to be a stagflation? Why would you rule out that possibility, out of curiosity?
Maybe we have the deflationary part of it first so that people could buy assets cheap and then they reflate.
Right. We have the system, in my opinion, never rebooted. All the governments did was continue to put liquidity into the system, and it went to the wrong places. That's my opinion. If you look at the
I agree 100% with that.
Right. So therefore,
100%.
Okay. So therefore, when I go and look at some of the other indexes, I look at the shipping index, and I say to myself, goods. With the amount of money that was pumped into the system by the central banks globally,
there's no velocity.
Right. Well, there's no velocity there. There's no velocity in money. The M3, the M2. There's the velocity of money's collapsed. People are not spending the way they claim they're spending. They're borrowing. and this keeps getting worse and worse because the government keeps telling us that everything is great. They've changed the formulas for the unemployment. They've changed the formulas for a lot of things, and they're telling us that things are wonderful. Well, here in Greenwich or Fairfield County, there's a lot of people that can't eat at night. The food kitchens are bare because people are coming for food.
But that's a wealthy area, isn't it?
It used to be, absolutely. But
Yeah.
Dale, these people are leaving. You got major hedge fund guys that left Greenwich and went to Florida.
Yeah.
The budget in Connecticut, New York, New Jersey, these states, it's awful. The taxes are awful. So, you know, to answer your question, am I looking to go somewhere else and watch it? I've got my toe in the water. I'm concerned. I don't know how deeply devastated it could get, but I just remember, I mean, I've studied the Great Depression, and one of your, you've had a speaker on, and somebody I follow puts charts together comparing 1934 to 1937, how we got a 95% correlation to that, and that the market.
That's where the Fed tightened. We were coming out of it, and the Fed tightened, and it was a mistake, and we double dipped. And
they're doing the exact same thing right now. There's no inflation. So why are they raising the short-term rate? Because does he not like President Trump? I don't know. You know, I'm a registered unaffiliated, so I'm not registered with any party. But there's just too much political storm out there, which is a problem for any country, and we all know that. Things are not smooth out there. So when I put that all together in historical, and I go back, you know, to the ancient Greeks, the ancient Egyptians, the ancient Romans. If you look at what we got, the ancient Greeks were competitive at the political level. They started fighting at the running of the government, and that destroyed their society. That's where the Olympics come from. They're very competitive. Then you got the ancient Romans. The Romans went broke, and they also had people infiltrating their army. That was a problem. Then what happened in Egypt? Well, they grew the wheat and the crops based on the soot that came in from the Nile, the river, and all of a sudden it stopped, and they couldn't grow those crops anymore. So I look at what happened in history, and I look where we are today. You know, United States is a young country. It's not as old as the European countries, and so we're still in the learning phases. And unfortunately, we now are a divided country, and the markets are going to basically. People are basically going to stop spending, they're going to stop investing, and this whole cycle could reverse. And that's the scary part that I see. And I see that like in the indicator that I'm showing you. I see that in the spreads. If you look at the 10-2 spread, look at this.
So you're looking for the inversion. And so the only place to hide is cash and treasuries. And do you, so let me ask you, is that bullish for the dollar? In that scenario, that could take the dollar sharply higher, right?
It will, but not
initially.
Yet. In my opinion, not yet. The dollar's not ready to go yet. It will be ready to go. Let me just pull that up, the dollar index. I trade the individual currencies myself. I don't trade the index. But I see a wave here that if you look where the commitment of traders are, they're not neutral here. They're short. They're short. So I'm waiting for this to build up a little bit more. I think there's trouble, like you had been talking about, at the 95.50 area. We're a little bit above it. This could be what they call it, like you guys know, the ABC. You got a double top, something here. Something needs to pull back. Get these guys back.
Yeah, that's what I'm looking for. 93 would shake them out.
Yeah, absolutely. Or even a little lower, right there. And bring these guys back up here, which I think is just going to be maybe a month or two. And then we're going to see this. So I'm shooting for 112 eventually, which would put the euro below par,
parity.
And that would put gold about 800. That's what I'm kind of looking at.
Okay.
That's my scenario. I do believe we're going to get. I'm long gold right now, so I think we will. There's a chance we'll get a nice pop in gold just based on the trading cycle that's coming in here for the end of the year. And you see the commercials are not that short here yet. In fact, they're kind of at levels where we saw back in 2016, where they were neutral, and then it kind of popped as they got short, you see? So I need them, I would like to see it test this 1265, 1260 level. Then I think we'll get that drop, and we'll see that in the commitment of traders.
And what's your downside target, 850 you said?
800 on gold,
Okay. Well, you know what? You brought up age and history. How about back to the last bull market high of 1979, 1980 of 880 when Russia invaded Afghanistan and the Hunts brothers had the silver squeeze at 50 bucks. That would be kind of a natural, because from there we went down for 20 years until 2000.
That's true.
Write that number down, 880. That was a high
880.
in 79.
For gold, you mean?
Yeah.
Yeah,
880.
880 to test that 880. Yeah, I don't disagree with that at all.
Previous high before, the last bull market when guys like Maury Kravitz were like the king of the pit at the IMM.
Right, I agree with that.
Yeah. Okay. So wow, some.
I mean, just look at lumber.
Interesting analysis.
Dale, look at lumber.
Yeah.
Where's the great housing they were telling us about?
Well, 6 months ago, it was 650. So we've had a lot of real sudden, dramatic, impulsive waterfall declines in a lot of different asset classes. Yeah, the housing market index looks the same.
Yeah.
Yeah, S&Ps.
S&P,
okay.
Look at that. I mean, that to me is a very dangerous top.
Yeah.
And it's due. 2018 is a good due date for this, and a lot of cycles come to fruition where, in my opinion, again, I'm not giving your audience advice, but my opinion is I'm going to be selling rallies all the way down to 2100 on the S&P. That's what I think is coming.
Daniel, if I may interrupt again, I agree in like 99% of what you say. I honestly do, in everything. That the system has been completely mismanaged, that they tried to mount a recovery based on the wrong tools, which is simply trickle down, theoretically speaking, economics just by using monetary policy. I agree with everything with you. But I'm asking again, what makes you think that the third time will be the charm, meaning that the US dollar is going to actually sustain its buying power after the US starts running? Because I guess we agree on the fact that if now, theoretically speaking, during a period that the US is not in war, it's in an expansionary phase, it's actually spending more than 1.2 trillion that it doesn't have every year and it has to borrow. The moment tax collections go down after the next recession begins, and all the entitlements of unemployment, etc., start kicking in, and if they try to do some Keynesian economics as well, they're going to be running a $2 to $3 trillion deficit. So, what makes you think that during the next crisis, the faith to the US dollar is not going to be destroyed? So, in essence, added to the fact that we're going to have a depressed economy, we're also going to have appreciating prices in the US due to a dollar that's going to be depreciating very fast in price. So in essence, stagflation. That's my only question, because I agree in anything else with you. I'm a little bit skeptical about the possibility.
Steve can't see how you could have a bull market in the dollar with the U.S. economy and deficits going to be. Could it be, Daniel, that it's all the dollar-denominated debt around the world that during this deleveraging, it's just such a great demand for dollars that the economic condition of the U.S. isn't as important as rolling debt?
You just hit it right on the head. The fact that debt around the globe is denominated in U.S. dollars, as this debt defaults, there's less dollars in the system. So therefore, the dollar would become more valuable. The student loans, the auto loans, absolutely. So that's the area. You just got it. That's exactly what I see, is that there's going to be a repatriation of a lot of money coming back to the United States. They're going to put it into the Treasuries, which will also help the Treasuries rally. And therefore, where else could you go? What if you're not in the U.S. dollar? Where else would you go? You're going to go to the bitcoins of the world? That's not going to help. Can you go into gold?
That's not my point for sure. I believe Bitcoin and all the cryptocurrencies are going to, I think the risky assets, and I believe in the next crisis, the vast majority of them are going to evaporate, literally.
Oh, absolutely. Absolutely. There's no question about it. In fact, that's an experiment that all the central banks are watching, and they're going to learn from all the mistakes, because they'll eventually do the crypto. But the bottom line is, where can you go? If everything points to what I see, where would you put your money? the US dollar, the United States, is probably, in my opinion, at this moment, the safest country in the world to hold assets. But if you put your money in gold, how can you go down to the local supermarket and buy things with gold? They're not going to take your gold. So you need some kind of a liquidity, and that's going to be the US dollar. When I travel around the world and I go to different places, they take the US dollar. They take cash. These foreigners, they love it. This is a demanded currency. It's not going to go away. I've heard about these petrodollars and all this other stuff. That's not going to happen. You know, the oil crisis is just around the corner, where I think oil, part of this, I just have it on the chart there, I think oil is going to collapse and test the low of 25. The demand for oil is going to drop dramatically. So with all this happening, where would you go? And now I've heard the other story, that the dollar's going to collapse because of all the US debt and gold's going to go to 5,000. That may happen, but not, I don't see it in this
later.
Yeah.
Out of desperation, when the Fed is QE infinity in helicopter money.
Right.
After the deflation.
After it goes to 112, yeah, it could drop back to 50.
Yeah.
But during this cycle that I see materializing over the next 2 to 3 years, or I don't know how long it could last, this could be very serious. And I've studied the depression, and I've studied what happened in the 1890s. We had a depression in the 1890s. I studied 1907 with the banking problem.
The longest depression was after the Civil War. It was 25 years.
Right. I mean, and speaking of Civil War, look what we got going on here, Dale.
Yeah, I know.
I mean, we're on the edge of a civil war with the words that are being spoken.
I know. Yeah.
So I look at all that, and and everybody says, "Oh, everything's great because the stock market's up." That's not the answer. That's not the answer. And
thanks for cheering us up today, Daniel. And oh,
it's a pleasure.
I'd rather, sometimes I wish I didn't know and I could have been an ostrich and just had my head in the sand and tra-la-la-la-la, row your boat gently down the stream. But it's becoming harder and harder to ignore that there's something wrong. And,
exactly.
The timing of this, maybe you're such a big bear and we're heading into November when you should be thinking about hibernating. Are you going to take the season off and stay awake instead of hibernating this winter?
No, I mostly day trade. I love it. In fact, it's too bad we ran out of time because there's so much that I wanted to show in that reference to day trading. It's just, phenomenal what goes on with those.
We'll do it again.
Absolutely.
I appreciate the macro and appreciate you bringing your charts and presenting.
We don't have anybody really pressuring us. I mean.
Oh, okay. Yeah, go ahead then, Daniel.
Daniel, go ahead. I mean,
Steve is like my producer.
15 more minutes. I mean, it's going to be.
If you guys broke
a pleasure.
I got 15 more minutes because I'm not.
Oh, absolutely. It's our pleasure.
Sitting in one of those chairs like you see in Hollywood with one of those megaphone horns. Action. All right.
All right. So the floor trader pivot points, if you're looking for entries during the day, these are really great. Now, this is the charts. This is the current euro. I follow the commodities to trade the spot because it tells me what the guys are moving in. So if you see those lines going across, the middle line is the pivot, and the upper two lines are the resistance areas, and the bottom lines are the support areas. And this is a formula based on, let's see if I can get there. Here, the expected highest high, expected high, the pivot point, the expected low, and expected lowest low. And guys, you can Google this formula. It's simple. This is it. There's nothing complicated to this. And there's no mathematical reason for this because I'm a CPA. I count cards at blackjack. I understand numbers. This just works because people follow it. So I go back to my screen.
You just proved my theory. People always say, Daniel, I know the secret to trading. And they'll sell you the secret for, I don't know, about $1,000 or so. But the secret is if you could add and subtract, multiply and divide, you could trade.
That's it. That's really it. You got now. Just Dale, look at the right-hand screen. I got a tick bar. Now TradeStation, I could do tick bars. So this is 1,500 ticks per bar. So if you look, you can even see it on the left-hand screen on the 1 minute. That pivot point has some validity to it. It came up to it, it pulled back from it, it broke through it, it came back and tested it, and then it touched it right at the top about what, a minute, 2 minutes ago, or three, I don't know, 1,500 ticks. So I look at this and I say, okay, I'm going to trade off of this. And I look at certain times of the day. I also have this thing I built which shows me the number of contracts, or the size contracts per trade. So when the contracts get really big on the upside on the offer price, I get a thing that says or I'm sorry, well, on the bid, as if I see a large quantity of bids being hit by size of 10 or 15 contracts lots at a time, that tells me the pros are selling it. And then I get buys down at the bottom that the pros are buying the offers. And that kind of gives me an inter-movement during the day that I kind of follow.
So the pros sell on a full moon and they buy on a blue moon. Buddy?
Well, listen, absolutely. I'm a big believer in the moon cycles too.
Yeah, me too. I'm a lunatic.
We came down from October 4th on a new moon into the full moon, October 24th. I was on Fox. I said that 3 weeks ago. There'll be a strong bottom, and something's going to happen on October 24th. Look what happened. You had the bombing guy. You had Megyn Kelly losing her show. You had a lot of, and the market was down 600. Things happen.
I think I had hemorrhoids that day, Danny.
Well, listen, I hope you feel better, by the way. I've had pneumonia before, and it's not fun.
Yeah.
So, just take care of yourself with that.
I rushed it a little bit. But, what a great guest you turned out to be. And I just took a shot. I saw your, a tweet by you. And that's what I do. I reach out and, want to help edify our community. And you did a great job today, buddy. You have a lot of knowledge to share. And you got a lot in a half an hour. You're now my trading warrior brother, like it or not.
Thank you. Oh, I appreciate that. Listen, I got a lot of wounds too, so I learned from a lot of wounds.
We all do.
Yeah. All right. Well, thank you very much. If you ever want me to come on again and update, I'm here. I kind of cut down my business. This is just what I do.
Okay, buddy. It was great meeting you. Everyone, thank Daniel Shaffer. You could follow him at Daniel S. Shaffer. And what's that page? Let me show people. You know what? I think that people should take a look at maybe getting your books. Let's see. I'm going to show it. So Daniel wrote Profiting in Economic Storms. If you want to, be prepared for the bear case, these are probably some other interviews he's done, but this is his website. This is your web page here.
And those clips are from me on Wall Street Week with Anthony Scaramucci.
Oh, okay. Yeah, I was on with Louis Brookhiser.
Oh, he was great.
Didn't he look like George Washington?
He sure did. In fact, when I just got remarried a year ago, and I was on my honeymoon down in the Grenada, and his daughter was at the place that I was getting married.
Huh.
And we had a nice conversation. He was here in Rye, right next to Greenwich in New York.
Huh.
So interesting fellow.
Thank you so much, Daniel. Good hunting. I hope pips rain down on you.
Thank you. You too, and everybody in your community. And thanks for what you do. I think it's wonderful.
Thank you, Daniel. Okay. Daniel Shaffer, everybody. Forex Gal says thank you. Bob wants to know if you have a newsletter. Daniel does have the secret. Great interview. So thanks again, Daniel, and I'll see everyone for Turnaround Tuesday tomorrow. And remember, don't just count your pips, count your blessings. Adios, everyone. Thank you again, Daniel.
You're welcome.